Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the founder and general partner of Better Tomorrow Ventures, Sheel Mohnot. Welcome.
Thank you. Thanks for having me.
Okay, great to see you. So look, before we get cracking, we're going to learn a little bit more about Better Tomorrow Ventures. Okay, so Sheel, tell us about BTV.
So BTV, we are a early stage fintech focused fund investing globally. So we're now investing out of our second fund, which is actually two funds put together. There's a $150 million seed fund and a $75 million opportunity fund. Typically, we lead pre-seed and seed rounds. And I think we think about our fund as being the founder's first choice. Myself and my partner Jake, are both founders ourselves, and we're building the fund that we wish we had when we were founders.
And I mean, I think about a year ago, you actually raised most of this money you're talking about, in total
That's right.
$225 million. Pretty good timing. Was it just luck, or you kind of saw the writing on the wall?
No, I have to say it was definitely luck. I'll say we didn't have luck when we raised our last fund. So when we raised the first fund, the $75 million fund, a lot of it was just during the pandemic. So we were planning to actually do a close on the fund March 30th, 2020. And as you can imagine, everyone pulled out, including people who had signed everything. And so we ended up, sort of thinking maybe we'll start to have a smaller fund. And then, of course, the money printer started, and we ended up with a larger fund than we'd intended. We'd intended on 60 for the first, ended up at 75.
And what particular, you mentioned some of the kind of the way that you've split the money, or the plans for the money that you've raised. What particular fintechs are you targeting, and why?
So I wouldn't say we have a particular target. I think in this business, you can be very thesis driven and have an idea that you want to invest behind, or you can be opportunistic and say, I'm going to look at everything that comes along and make a decision on each one. We probably are a little bit more opportunistic. And I think it's at seed stage, it's definitely easier to be opportunistic than it is to be thesis driven, because who knows what's going to come along. Um, and so, I'd say that being said, we are interested in some categories more than others. We've done a lot in fintech infrastructure, uh, especially behind the embedded fintech thesis. And I think, the next generation of fintech companies probably looks very different than the last. And, the last was a lot of bringing stuff that was offline online. And I think the next bit will be genuinely new stuff and bringing fintech into non-fintech applications like vertical SaaS, marketplaces, etc.
And I read that you were planning to invest in some like 30 investments out of this money raised, ranging between $500,000 and $3 million in terms of check size. How far along that path are you? How many companies have you invested in? How much have you deployed so far?
Yeah, I think we're about 20% of capital deployed in the past year. So I think we feel like we're in a good spot, from have a bigger fund, have plenty of capital to deploy in this period. Um, I think we may end up doing more than 30 companies. And it's just a function of when we set up the fund, the market was a little bit different. Um, Companies were we had almost 100% graduation rate from seed to Series A in the last fund. Of course, that was an anomaly of the 2020, 2021 timeframe. And the world is very different today. So what we've decided is, instead of doing a lot more capital for follow-on, we will do more first checks. So the fund lasts a little bit longer.
And while we're on the subject of money, earlier this year we saw the collapse of Silicon Valley Bank, where some of your portfolio companies, I believe, had their cash.
Yeah.
What do you now say to your portfolio companies, in terms of looking after their money, stashing their cash that they've raised from you and perhaps others, and minimizing the risk of fallout in the event of a bank run in future?
Yeah, absolutely. So, Silicon Valley Bank is was and hopefully will be again, under some new ownership perhaps, a really important player in our ecosystem. So its fall is very difficult. Um, but what we've always said to people is, um, it's important to have multiple options. So we have recommended to folks open another bank account at another bank. That way, if you need to move money, you can. Now, in the case of Silicon Valley Bank, depositors were made completely whole. So there actually was not a huge issue thanks to heroic efforts from our government. Um, but the issue is actually more than that. It's not just about deposits. For our fintech companies, there's issues around lending. So SVB was a big lender to our companies and payments. A lot of people had programmatic payments that they rely on SVB for. And if you take on debt, oftentimes a covenant is you have to keep your money in SVB. So there are more challenges and things are more intertwined than we think.
Okay. So look, we've heard about Better Tomorrow Ventures. Let's now get to know Sheel a little bit better. So you founded BTV in 2019, I believe, Sheel. Why
That's right.
fintech?
Yeah, so we call it Better Tomorrow Ventures because we want to make an impact on the world. Definitely not an impact focused fund in terms of like metrics and that sort of thing, but as we think about it, we want to make impact. And we think fintech's a fantastic way to do it. Finance is something that touches every person in the world, and technology has the ability to improve finance. And so that's one side of it. Another side of it is the closer you are to money, the easier it is to make money. And so I think those things combined, plus just like an interest and passion that Jake and myself have.
Okay. And I see from your website you're a bit of a cook. Do you have a particular signature Mohnot dish or something that you're particularly fond of?
I'd say I definitely whip things together more than make stuff off recipe. So I'd say recently I made ratatouille a couple of days ago. Been enjoying that.
Inspired by the Disney movie, perhaps. But
Yeah, exactly.
I have to ask this. I am kind of saving the best till last because I expect this to have elicit the richest response. I couldn't help but notice that you had not one, not two, not three, not four, not five, but 6 weddings to your wife, including the legal one in Taco Bell's metaverse. What, why, how? Please explain.
Okay, so you're right. So I'm a huge Taco Bell fan, and they had this contest where they said submit a 2-minute video and have your wedding in the Taco Bell metaverse. And I brought it up to my then fiance, and she said, "You're crazy, but let's just make the video. Why not? It's kind of fun." So we were on a road trip anyway and kind of bored. So we said, let's just make a video. So we shot a video fairly quickly, didn't think much of it. In fact, at the time we shot it, we thought we probably won't even submit it to Taco Bell. But then we got back and I said, why don't I just submit it? And then if we win, we won't actually do the thing. So we submitted it. And then, a month later, Taco Bell informs us we've won. And then we say, okay, we're not actually that interested in doing this. They said, well, let's get on a Zoom call and we'll discuss it. So we got on a Zoom call and they were very convincing. They said, this is going to be your wedding in the metaverse. Do whatever you want and you'll be part of the Taco Bell family for life. And when they said we could be part of the Taco Bell family, my eyes lit up. I said, all right, this is for me. And so we did it. That was back in October and it's been wonderful. And that was in October that they told us. And the wedding was in February, and it's been great.
And you and your wife are both Indian, so I think many people would be kind of familiar with perhaps, let's say, certain expectations of weddings in let's say, the Indian community, just like there is in the Jewish community and other places. What did your parents say? There were no threats of disowning you or anything for doing this?
I think the fact that I'm 40 helps, and that they were just like, oh, thank God, at least you're getting married. But they certainly thought it weird and said why, but also, they've known me for 40 years, so they kind of expect the unexpected.
Okay, unless I mistake, was it Demolition Man, where all the restaurants in the future are Taco Bells? Is that?
That's right. That's
one?
right.
Okay.
Yeah.
So
Good memory.
That sounds like an ideal future for you, maybe. But all right. So look, a key part of this interview is actually to get your take on the future of finance. But first, we're going to take a very quick break, after which we're going to continue our conversation with Better Tomorrow Ventures founder and general partner, Sheel Mohnot. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Sheel, let's talk about the future of finance. Okay, so one fintech founder I was listening to the other day said that given the fundraising climate, given the collapse of Silicon Valley Bank, the name of the game right now for fintechs and most startups really is just getting to 2024. Can you give me and our audience a bit of a more optimistic assessment?
Yeah, look, I think great companies will continue to get funded. We had three companies last month raise Series A's, and the environment is just very different than it was in 2021. In 2021, when our companies were raising Series A's, it was at a valuation of actually like 8 to 15 times the multiple of where we invested, which is absolutely bonkers. And now it's much more measured. It's like 2 times where we invested. And so founders are gonna have to make do with less, and that's fine. That was the case a few years ago. Um, so I think great opportunities will continue to be found. There's a lot more talent on the market, and hopefully there'll be fewer competitors. One of the things that happened during the crazy times of 2020 and 2021, where every fintech company that got started immediately had 4 or 5 competitors doing the same thing, selling to the same customer. And what that meant was none of them really got the opportunity to build themselves up to a huge revenue number. And I think in this world of fewer fintech companies, it's going to be great for the ones that do decide to build.
And you mentioned that valuations were much more measured, much more sane, let's say. Where do you see things going from now? You think that we're going to see incremental growth? Are we still seeing pressure on valuations coming down? When do you not necessarily see the hockey stick kind of re-emerging, but when do you see things starting to build momentum again?
Yeah, so I think so at seed we haven't seen a fall in prices yet. Now, I think how that plays out is the rest of the markets were basically frozen. So it started out, public markets started falling with interest rates rise, and then, there's a chain effect that went down everywhere until seed. Now, at seed, we didn't see a fall, and I think there's a few reasons for that. One is all these other investors that were doing later stage stuff, they had nothing to do, so they started doing seed deals. Two, there are all these new investors in the market who are relatively price insensitive, particularly in fintech. And I think because of that, valuations didn't really fall. Now what's happening is some of these companies are raising A's, and the A's are getting priced not that differently from where the seeds were priced. And so what that means is the next seed investor looks at their book and says, okay, I didn't really get a markup here at the A. Maybe I need to price the seed a little bit lower. And I think there's going to be a repricing at seed as well. It needs to happen. I think, funds that are investing in seed companies all at a $25 million valuation, I think are just not going to see returns. I think there's going to be a really ugly set of funds out there that have just terrible returns.
And is this something you're seeing across the board? Are there some niches or subsets of fintech, I don't know, AI, for example, which is obviously very hot right now, where perhaps valuations are being pushed up again, or is it just across the board in fintech?
So certainly, yes, AI valuations are higher. But there isn't really that much AI in fintech. If you think about where AI and fintech intersect, there's a few things, customer service, a few other things, but really a lot of things are regulated away. And so AI actually probably is a negative for financial services in the short run because people will use AI for fraud, and it's going to be really, really good for the fraudsters before it's good for us.
Okay, well, that's something for the fraudsters to look forward to. Of course, even before we had the shock of the Silicon Valley Bank collapse, there were geopolitical risks, there were rising interest rates, volatile markets. How do you see this impacting the fintech ecosystem if there is, a recession which comes along? Because I guess on the one hand, customers want to save money, but if these fintechs can help them save money, then maybe it's actually a pretty good time to be in that space.
Yeah, I think all those things are true. But I think the number one thing that matters to us is interest rates, frankly. We invest in growth, profits tend to come later. And as interest rates rise, the equation on that changes. And so, you know, I, we're hoping for a swift recovery of the economy. But I think the number one thing that's going to impact our companies is the interest rates. Um, Now, the recession, whatever, depending on how you call it, you could say we're in a recession or we're not. It's certainly a weird one with low unemployment. And, it's definitely an odd time, but I do think great companies will be built during this time, and hopefully we have a swift recovery.
Right, and they often say that it's a crisis is a great time to launch a startup. But
Exactly.
again, just like valuations are not uniform in terms of when they fall or when they rise, presumably, there will be fintechs that thrive in this environment, and there will be others, perhaps whose business models were not as robust, who are maybe going to fall by the wayside. Without obviously referencing any specific fintechs that are in your portfolio, perhaps you can, where do you see, the ones that are going to really come out on top, and which bits of the fintech ecosystem would you say perhaps there's going to be, if not at best consolidation, and at worst a bit of a shakeout?
Yeah, let's start with the latter. So I think certainly consumer fintech is probably the one that's in the toughest spot. And the reason for that is multifold, but one is with the Apple privacy changes. It's just become customer acquisition has become a lot harder. The other is I'd say, like there's a bit of trust erosion, um, SVB fallout and other things um, that causes people to think twice about a new finance application. And I think SVB is one part of it, but another part of it is just a lot of people have had bad experiences with sort of like fintech 1.0. And so I think it's really important in any new fintech product to build trust. And so that's what we tell our consumer businesses. Now, your other thing, which is like which companies are better positioned, I think there are companies that are well positioned in this market of higher interest rates. So companies that take deposits are in relatively better shape. Um, and then, I think we've always invested behind the infrastructure thesis and believe that companies that build products that enable non-fintech companies to become fintech companies are going to continue to do well.
And one thing we haven't talked about is public markets. I know your BTV co-founder was also a co-founder of NerdWallet, which is publicly traded. When do you expect
Yep.
public markets to again be welcoming to fintech IPOs, which may actually be further down the line, or more relevant to other investors, in the sense that you're quite an early stage investor?
Yeah. So, we're early stage, but I do think, as you know, the markets are relatively closed for IPOs. I think it tends to be a 18 to 24 month cycle. So, hopefully we'll see some movement towards the end of next year.
Okay, and in 2022, everyone was rushing to say, perhaps in the first part of 2022 at least, everyone was rushing to say they were doing something with blockchain. So, I mean, along with the crypto ice age, a lot of these initiatives have been quietly forgotten. What's your outlook for Web3, crypto, or blockchain, fintechs? Are you one of those bulls, like that just perma bulls that just never sees their optimism dim vis-a-vis the sector?
No, actually, probably quite the opposite. We haven't invested much behind a crypto thesis. We have really just one company that we invested in, and it's access to stablecoin for API for access to stablecoins for folks in other markets. Um, we've looked at a lot of crypto stuff, um, and just never found great use cases. So that's been the challenge on our side. We want to invest in stuff that has a real use case today. And for a long time, I was banging my head against the wall. Like, what am I missing? In that these companies like aren't solving the problem that they think they're solving, or they're solving a problem but creating other problems. So, I can't wrap my head around it. So, we are certainly not perma bulls. That being said, I hold Bitcoin and Ethereum, and have been happy with that over the past many years.
For someone with, I think, a wedding certificate as an NFT, I thought you might be a bit more gung-ho when it comes to crypto. But okay, let's leave your wedding alone for now, because we are coming up to our time for our rapid fire question round. Are you ready?
Let's do it.
Okay, so I've got 90 seconds on my phone, and when my phone hits that mark, then we'll stop. So here we go. What fintech segment has the biggest potential over the next 5 years, in your view?
Embedded.
What is the biggest pain point in your everyday financial life that you'd like to see resolved?
Um, Notary signatures.
Are we at the beginning, middle, or end of the fintech wave?
Middle.
Do you have a metaverse strategy outside of your married life?
No.
Do you think EU and US regulations have been keeping pace with all the new possibilities and behaviors in the financial industry?
No.
How would you describe NFTs? A scam, B, an interesting concept, or C, part of the future that we really don't want to be missing out on?
Interesting concept, limited use cases.
I think you answered this already. Have you ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
Yes.
On a scale of 1 to 10, where 10 is the most likely and 1 is the least likely, how would you rate the chances of the following happening in the next 10 years? That one of the neobanks will be as profitable as a top-tier legacy bank?
Uh, 5.
That CBDCs will become a mainstream reality in the US and EU?
3.
That you'll be able to open a crypto account at a top-tier bank?
6.
That SWIFT will still be the main tool used for transferring money around the world?
5.
Okay. We are out of time, so we only had 2 more left, but I think that'll do for now. So, but I'm afraid we're out of time for our conversation as a whole. So I really just want to thank you, Better Tomorrow Ventures founder and general partner Sheel Mohnot, for joining me today for a great conversation.
Thank you, Elliott. It was wonderful.
And for everyone watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. See you next time. Bye-bye.